from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, shares of Peloton surging amid reports that it's exploring takeover options. What company might be the right fit? We will discuss. Plus, Peter Thiel's plans to double down on his support for former President Trump's political agenda. And he doesn't want that to be a distraction for Mark Zuckerberg. Details on why he is stepping away from Facebook's parent company. And Spotify CEO Daniel Ek says the company will not drop Joe Rogan's podcast from the platform despite more controversies resurfacing. More on that later this hour. We will get to all of that in a moment, but first let's get a look at the markets. U.S. stocks falling in late trading amid renewed declines in big tech. Our Ed Ludlow here to break it down. Ed?
Yeah, it's been an up and down kind of day. We swung from an 0.8% gain on the NASDAQ 100, very tech-heavy index, to an 0.8% decline, and it was those big names in technology. Meta, the Facebook parent, of course, having another down day, 5%. That takes its year-to-date decline to more than 30%, and that breaking news you just discussed after the bell that Peter Thiel will step down from the company's board, which he's been on since 2005. There was a bright spot, though. It's in cryptocurrencies, and I actually want to quickly look at Bitcoin over the last 5 days or so, because it was 5 straight days of gains on the world's most valuable token by market value. You can see it's kind of sustained momentum. We're back above $40,000 per token. That stretch of 5 days of gains, because of course, crypto trades 24/7 over the weekend. For those of you that had a nice time off not looking at markets this weekend, can't speak for myself, then that's the best run of gains since September. But the big company story, of course, Peloton, rising by the most ever, really significant gain, had been up more than 30%, but we kind of paired that throughout the day. And then there's the other players, right? Wall Street Journal reports Friday, Amazon's taking a look, talking to advisors, hasn't spoken to Peloton directly. The Financial Times, Nike taking a look, talking to its advisors, hasn't spoken to Peloton directly. And Bloomberg News reporting that Peloton is assessing its own options, but the street out there with a number of hypotheses that Disney could be a potential suitor. Apple, too, could be a potential suitor. You have Dan Iser-Wedbush calling for that one, but no real traction in the markets for those names that would be would-bes.
Interesting. All right, Ed Ludlow, I want to stick with Peloton. According to sources, as Ed just reported, the connected fitness company working with an advisor to explore takeover options. We're told the interest is exploratory, might not lead to a deal, but what company could be a fit to buy Peloton? I want to bring in Simeon Siegel of BMO Capital Markets, who currently has an underperform rating on the company, our very own Mark Gurman, who covers Peloton for us. So, Mark, obviously, we heard what Ed just reported. Tell us, anything we know more in terms of details, whether or not this deal or a deal like this is actually going to happen.
Well, of course, we know that both Amazon and Nike are taking a look at Peloton. They are weighing potential bids for the company. I think for Nike, it would make a lot of sense, given that they already have a ton of athletic apparel. Obviously, that's their business. So Peloton could fit in pretty nicely, giving them a new hardware business. Obviously, they had the Thiel band wearables several years ago. That was discontinued around 2013, 2014. So this would put them back sort of in the physical health tech space. It would give them the workout classes and would give them a brand new way to reach customers and, integrate a pretty successful brand, even though they've been taking a little hit recently in there. Amazon makes sense from the sheer amount of money the company makes. I think Amazon would integrate it heavily into Prime, make the Peloton subscription part of the Prime subscription. So you'd need to buy all of that, and that could be a new revenue source for Amazon. I strongly believe that Apple won't be buying Peloton if a deal gets done in the near term. I don't believe Apple has made a bid, and I don't believe at this point they are interested in Peloton. So I think you could rule that out, at least for the time being. But obviously, things could change, things get fluid into the future.
Right, and Apple certainly never made a deal this big and shies away from big acquisitions at all. Simeon, wide range of names here. Apple, Amazon, Lulu, Nike, Disney. Who do you think would make the best owner for Peloton, and what makes sense?
Nick Great had this wide list. They're like the largest mega caps of the world. It's like take your pick. So I think Mark brings up some really interesting points, and I think the fuel band is a really important point that people don't really talk about, but I'm going to come at it from the reverse angle. We cover the athletic companies. I cover Nike, Under Armour, Lulu. You watched all of these brands that sell shirts and shoes enter in one way or another equipment and hardware and then pull it back. And I think what they're increasingly showing is what they want to do is they want to sync with everyone. They want to be neutral, and they want to be able to play in that world more from the software angle than from the hardware. So I would be surprised from the Nike perspective. I think like the biggest question is figuring out what value Peloton brings. And I think that what's interesting are the notion of Apple buying Peloton was floated when Peloton had its star incredibly rising, and Apple chose not to do it. I mean, is there really this distinction if we're thinking about this is going to be needle moving? How important is that price? And I think that what we have to determine is, do an Apple or an Amazon or do any of these companies want a fixer-upper restructuring story, or do they want a growth story? Generally speaking, I think we probably agree the latter. If we think about Whole Foods, if we think about Beats, if we think about the shiny, really exciting companies that these companies buy. And by the way, I love Peloton as a product. I'm a user. But I think what we're seeing is faltering demand. We're seeing a rebase in terms of what this company represents. And that's why I think right now, Peloton's best bet is probably what they've been doing. It's starting to re-elevate. It's starting to raise price rather than cut it, and start to kind of core focus on who that strong, loyal, really impressive base actually is.
Right. There's no question there certainly is a big loyal user base out there, but how many new users is Peloton really going to add at this point? And a new owner isn't going to change the problem that maybe the connected fitness market is just a smaller market than some folks thought when we were in the middle of a pandemic. You know, how will a new or a bigger company address some of these challenges? Simeon?
So you said it right, a big base. It's actually not that big, right? Relative to a startup, 2.77 million subscribers is fantastic. Relative to one of the mega caps we're talking about, and it doesn't move the needle. So I think it's exactly your point. Listen, Peloton dropped the price of their bike pretty heavily and did not see a surge in demand. What that means is there's not a high price elasticity. So I think that what we are seeing is COVID was a pull forward of demand, not an expansion of it. And at the end of the day, Peloton is a fantastic company for a very niche, insulated group of people. And that people has been phenomenal. It's been bigger, it's grown faster, et cetera. But it doesn't make it on the same plane as some of these mega caps in the world.
Mark, what's your sense of a size of a deal if this happens and the likelihood of something actually happening?
Yeah, I mean, at this point, I don't think it's very likely. Obviously, Peloton reports earnings tomorrow, so it's possible that Peloton lawyers and lawyers for potential acquirers are going to work through the night and into the morning tomorrow in the afternoon to try to get something done. But at this point, it seems like things have only started moving in recent days very quickly, obviously with Peloton hiring advisors and some of the potential acquirers hiring advisors to investigate a potential deal. In terms of what it would be priced at, I mean, obviously Peloton would want to come in above its market cap, which is now below $10 billion. I agree, there's probably a better world for Peloton here if they started to sort of raise their prices a little bit, try to expand their product portfolio, and try to stick this out independently, right? There is no absolute natural fit for Peloton, I think, of one of the mega caps or one of the larger companies. I think it does fit in terms of what we've talked about. I do think Nike is the best fit of the three, but I'm not sure something gets done by tomorrow.
Simeon, if a deal doesn't happen, where does that leave Peloton?
Listen, we haven't underperformed on the stock like the product, but I think that right now this company is going through a reset. How many growth stories do we know once they become restructuring stories? It's not normally a fixed issue in the quarter. I think that right now there's a process. I think they're making healthy decisions. Healthy decisions aren't necessarily the bullish decisions for the short term. So I think that the reality is they need to look inward. They need to fix this cost structure, and then we can evaluate what the company is worth from here. But especially after today, I mean, we haven't underperformed on the stock.
All right, Mark, I do want to ask you about another story you're reporting on, and that is Apple's big event coming up on March 8th. You're reporting that they're working on a low-cost iPhone and iPad. What can you tell us?
So this will be an event currently planned for Tuesday, March 8th, one of their virtual launches. This will be probably the least significant and the smallest one of the year. This will be for a new iPhone SE and a new iPad Air. The big upgrade coming to both will be 5G. Those products are stuck on chips from 2020 and earlier, lower-end 4G processors. This will be a 5G upgrade, so look out for that.
All right. Mark Gurman, Bloomberg, and Simeon Siegel of BMO Capital Markets, thank you both for breaking all that down. Meantime, Toshiba has scrapped a plan to divide into 3 companies that was criticized by activist investors. Instead, the Japanese tech giant will split in 2 and sell non-core assets. Toshiba says that'll be cheaper and smoother than the original plan. Coming up, Peter Thiel doesn't want his political values to distract from Meta, so he's stepping down from the company's board. All the details next. This is Bloomberg. It is the end of a controversial partnership. Peter Thiel, tech investor and conservative provocateur who has advised Mark Zuckerberg for nearly 2 decades at Facebook, now Meta, will step down from the company's board after its annual shareholder meeting in May. Techonomy founder David Kirkpatrick, who of course wrote The Facebook Effect about the history of Facebook, and our very own Kurt Wagner, who covers Facebook, joining us now. So Kurt, let's start with what we know here. What do we know about why Peter Thiel is leaving now? Of course, his support for President Trump has been very controversial, but Mark Zuckerberg has at all times supported Thiel in the name of ideological diversity on Facebook's board.
Yeah, so we are hearing that part of the reason he's stepping down is that he wants to, continue to push former President Trump's agenda during this upcoming 2022 election cycle, and that it would be a distraction for Facebook. Now, it's a little bit confusing only because Peter Thiel has been supporting President Trump for years, and Facebook has stuck by him during all of that time. So it's a little bit odd to, finally leave now if that is indeed the real reason. But regardless, he has been on the board for, I believe, 17 years now. Obviously, as you pointed out, a controversial relationship there between Mark Zuckerberg and him. And so whether it's to push Trump's agenda or to do something else, is very significant that at this point he's finally stepping aside.
David, better than almost anyone, aside from maybe Mark Zuckerberg and Peter Thiel themselves, the nature of their relationship, that history, his importance or the lack thereof to the company. What do you make of this?
Yeah, it's a shocking development, although I think probably a beneficial one for the company long term. There's no question Thiel was someone that Zuckerberg listened to more carefully and with more respect than almost anyone for much of the company's history, especially when it came to making financial decisions, big picture decisions. But I think that Thiel's presence has really accentuated the impression that Facebook is unduly sympathetic to the right wing. And that is the impression many have had in its failures to moderate certain kinds of content. Now, the opinion on the right is quite the opposite, that Facebook is too negative. But I think a more objective view is that Facebook has not done enough to moderate voices that are considered to be right wing. And I think Thiel has played a huge role in influencing him to be that way.
Does Facebook or Meta, Kurt, still have that quote unquote ideological diversity on the board without Peter Thiel?
Yes, although it would not be nearly as dramatic, I don't think. You still have very outspoken board members, including Mark Andreessen of Andreessen Horowitz, of course. He's on the board, someone who's known Mark Zuckerberg a very long time, very opinionated in politics and business. He's still there. But you are starting to see this board kind of shift focus a little bit. It has become more, friends of Mark Zuckerberg, loyalists to Mark Zuckerberg than I think we've maybe seen historically. And so, the fact that Peter Thiel, obviously the two of them were very close, but the fact he's stepping aside, as David points out, is certainly still, I would say, very significant.
All right. Meantime, another big story on the Facebook front, Facebook threatening to pull Facebook and Instagram out of Europe based on new pending rules from the EU about data transfers from Europe to the United States. This statement coming from Meta directly: we have absolutely no desire and no plans to withdraw from Europe, but the simple reality is that Meta and other businesses, organization services rely on data transfers between the EU and the US in order to operate global services. Kurt, would Facebook actually do this? Pull out of Europe?
It seems unlikely to me for obvious reasons. I mean, this would be absolutely devastating to the company's reach. It would be devastating to the advertising business. But let's just remember that last year, Facebook did pull news from Australia. Now, a very different step than removing the service entirely. But my point being is that they are not necessarily afraid to kind of make these threats and at least, attempt to go through with them. And so while I don't think that it's going to happen, I'm not necessarily surprised that Facebook is starting to throw their weight around a little bit more and say, hey, listen, it's a benefit to EU citizens to have Facebook and Instagram here. We're going to dangle that in front of you and threaten to take it away if you don't play ball with us.
David, this is a complex issue here. Who has the better argument, Meta or the EU?
Well, it's not really in question because the EU is the legal jurisdiction and they have a right to make the rules as they see fit. I do think the chances are extremely good on this question that the EU and the US will come to some kind of an agreement before Meta, Facebook pulls out of Europe. Because as Kurt says, that would be a radical, incredibly destabilizing, stock destroying move. And hugely upsetting for the over 400 million Europeans who are monthly active users of Facebook. But there are other issues that are on the horizon that might be even more problematic in the Digital Services Act, which the EU is contemplating. And it could be that Facebook is talking like this now, sort of to put a shot over the bow to make the European regulators realize that they are not going to just sit back and let their business be dramatically impacted by prospective regulation.
Well, and what's really an impending issue is the stock price down another 5% today after that huge plunge last week between this data transfer issue, what we learned about the Apple privacy changes, Kurt, and how that's impacting digital advertising. You know, what are the holes we're seeing in Facebook's business model at this point?
I think we're really realizing just how dependent Facebook is on so many other institutions and companies, right? We've known for a long time that the service relies on Apple for the iPhone to reach people, for Android and Google to reach people. But up until now, we haven't really seen them suffer because of decisions of these other companies. And we're seeing that now, right? Apple is able to wipe $10 billion of ad revenue from Facebook's 2022 forecast by simply changing its privacy rules, right? And here we have regulators in the EU similarly making threats that could dramatically impact the business. And so I think we're just kind of realizing what Mark Zuckerberg has known all along, which is that Facebook is incredibly dependent on others. And when they choose not to play in a way that benefits Facebook, it can have really dramatic consequences.
All right, lots to continue to follow. Kurt Wagner, thank you for your input there. David, you're sticking with us. We're going to get back to you a bit later in the show. Coming up, Tesla being subpoenaed yet again, and it has to do with Elon Musk's tweets. We'll dive in next. This is Bloomberg. Tesla has received another subpoena from the U.S. SEC about a subject that keeps coming up. Elon Musk's tweets back in 2018, tweeting he was considering taking the car maker private. For more, I want to bring in Bloomberg's David Welch. David, I thought this issue was settled. What's happening now?
Well, this issue should have been settled a couple of times, but it just keeps coming back up. It all goes back to Elon Musk's funding secured tweet. When he was going to take the company private. He got in all kinds of trouble for that. And the two sides had settled, and he was supposed to have reviews for anything he tweets out. In other words, it was supposed to be treated like any other company communication. Lawyers would review it and make sure that he's not in breach of securities fraud and so forth. And then he had tweeted out again about a production outlook, and the SEC filed to hold him in contempt of that. They settled in April 2019, again setting up government procedures that would review his tweets, and now they're taking a look again because 10 days before this November subpoena was issued, he took a poll on Twitter asking whether he should sell 10% of his shares. Not quite sure it's related to this, but the timing's awfully coincidental, and he's just been monitored for this before. The shares really took a hit after he put that tweet out, and he was supposed to be having these things reviewed. So Elon likes to use Twitter. He frequently does so without really having a lot of review, and it just keeps landing him and the company in hot water.
So what's the likely fallout here? I mean, are you looking at a potential penalty? There's this impending lawsuit coming up in May. What are we expecting there?
Well, what will happen out of this, not sure. I mean, he's already had to give up the chairmanship of the company, and it doesn't look like he's going to try to get it back, and the company has had to pay fines. They could possibly fine him again. That doesn't really seem to be stopping him from tweeting. He doesn't tweet as often as he used to, but these still are tweets that are essentially material information that are moving the shares. His lawyer said in a court filing last week that the 2018, August 2018 tweet about taking the company private was truthful at the time. It wasn't fraud, but you still do get into a situation where you're putting market-moving information out on the street, and that seems to be what the SEC is just tired of seeing from this company.
We know Tesla doesn't have a traditional PR team anymore. Elon basically speaks for himself, but any response from Elon or Tesla on this latest development yet?
No, and we haven't heard back from the SEC on this yet either. We don't really have any more detail from either side. But when they're issuing a subpoena for an issue that was supposed to be settled 3 years ago, then they have to be looking for something, and it's just not a good look for Elon, and it's not a good sign for them either.
All right, Bloomberg's David Welch, thanks so much for that update. We'll continue to follow. Well, the tight labor market and war for talent is impacting even the biggest of giants. Amazon is now more than doubling its maximum base salary from $160,000 to $350,000, quite a jump there, citing a need to remain competitive in attracting and retaining top talent. Reports indicate the turnover rate at Amazon has reached crisis levels, with a record 50 vice presidents departing just last year. And keep in mind, Amazon employees also get paid in equity. Coming up, Joe Rogan keeps giving Spotify a major headache. First, it was COVID misinformation. Now, it's racial slurs. Still, Spotify CEO Daniel Ek says the company won't drop the podcast from its platform. We'll discuss next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. It is going viral as more and more problematic content from the Joe Rogan Experience resurfaces. The pressure is mounting against streaming platform Spotify, the podcast's exclusive host. First, it was COVID-19 and vaccine misinformation, for which Joe Rogan apologized, saying he'd do better and be more mindful of his guest lineup. Then, last Friday, it was a video compilation of all the times Joe Rogan has used the N-word on the podcast. The host said this was taken out of context and apologized again over the weekend.
Now, I know that to most people, there is no context where a white person is ever allowed to say that word, never mind publicly on a podcast. And I agree with that now. I haven't said it in years.
In a letter to staff seen by Bloomberg, Spotify CEO Daniel Ek says he is deeply sorry for the way the Joe Rogan Experience controversy continues to impact his employees, and underlined that Rogan's hurtful comments do not represent the values of the company. Joining me now, Techonomy founder David Kirkpatrick, still with us, and Bloomberg's Lucas Shaw to talk about how the story continues to develop. And look, the bottom line, Lucas, is Daniel Ek saying the podcast is staying on the platform. We have seen social media companies like Facebook and Twitter deal with these kind of content issues. Netflix, for example, recently with the Dave Chappelle show, taking a stand there. Talk to us about the options that Daniel Ek and Spotify have in this moment.
He doesn't have a lot of good ones. You know, when you have one of your biggest stars saying some of the horrible things that he said in the past, it puts you in a tricky position. You know, you made the comparison both to Facebook and Netflix. This is a lot more similar to Netflix, just in that Spotify has a direct relationship with this person and has put Rogan forth as one of the faces of the company. He's been pretty vital to their shift into podcasting. And so they don't want to end that deal under really any circumstances. I think there's a world in which enough pressure mounts. You go back to the archives and find enough horrible things that Rogan has said over the years that they have to change their tune. But you're going to need, more major artists like Neil Young boycotting the platform. You're going to need a real sign that people are kind of canceling their subscriptions for Eck to go that far. I think the desire is to, stay the course, but there is, of course, the option of ending the deal or trying to ban him in some way.
The hashtag delete Spotify was trending on Twitter today. Are people canceling? Do we know?
When they were asked on their earnings call last week, they said it was too soon to know, but they suggested that there had not been, a mass of cancellations. And their justification was that if there was some effect, it would probably be felt over a longer period of time. But we don't know yet.
David, Daniel Ek saying after speaking with Joe Rogan that Rogan has reflected and decided on his own volition to remove some old episodes. What do you think of the choice Daniel Ek is making here and the repercussions?
Well, so far, I don't think Ek has made much of a choice. He's basically just acted as if Spotify was like Facebook, and at least Facebook can credibly claim it's a neutral platform. That's not the case here with Spotify. I mean, Rogan's role on Spotify is quite comparable to like a host on Bloomberg or a columnist in the New York Times, making statements that are offensive. And in the case of Bloomberg or the New York Times, the publisher, the broadcaster, would bear responsibility, properly so, for the content that they have paid for and broadcast. And Eck doesn't seem to understand that that is identically the role that he is in. Now, he's saying canceling him, silencing him would be a mistake, but there's plenty of other things he could do, possibly, in my opinion, that would fall short of just getting rid of Rogan. But if Rogan had 130 podcasts that had to be removed, obviously he's a little bit of a loose cannon.
Now, Lucas, in your Screen Time newsletter, you point out that other platforms are paying other people also to say outrageous things. Talk to us about how this isn't necessarily just a Spotify problem or a Joe Rogan problem. And if so, what problem is it?
Well, it's a media industry problem right now. I mean, we have conversations about what prominent YouTubers who get taken down or punished or in some way for things that they say. People like Steven Crowder, people like Dan Bongino, who I believe has said he's not posting on YouTube anymore. I think if you asked some of the critics of Rogan how they felt about hosts on Fox News, they would probably hope that Fox News would exert more control over some of the things that come out of their hosts' mouths, especially as it pertains to COVID. It's not in any way to excuse Joe Rogan for anything that he said, especially when it comes to the racial slurs. It's pretty clearly despicable. But I think we're trying to figure out what is the role of these big media companies in kind of the views that they're putting out, and the very strong response it's getting from their users. Spotify's in a particularly unusual situation in that it is both, I think, a platform and a publisher, and sort of like a Netflix. It's trying to appeal to everyone, and when you try to appeal to everyone, you're likely to alienate many of your customers on a regular basis.
Right, David. I mean, there is some distinction, of course, between a Spotify and a Facebook, but, ultimately, is it not much of a distinction at all?
Well, there is a distinction that Facebook, for the most part, doesn't pay to have people on its site and then disavow responsibility for that. I think what we're seeing in some sense is Daniel Eck's immaturity as a leader, or his inability to really evolve as his service, successful as it is, has evolved. And he's got to think harder about what he really wants Spotify to be and how he wants it to be seen. And I don't get the feeling that he's gone through a sufficient process yet.
Meantime, Lucas, Rumble, a Canadian platform, throwing its hat in the ring, offering Joe Rogan a $100 million deal over 4 years to bring all of his content there. No censorship. Will he go for it?
Not unless forced to for some reason. I mean, this has all the hallmarks of a publicity stunt. Rumble has gotten attention for being an alternative platform for kind of some of these right-wing talking heads who have been in one way or another banished by the mainstream media. David brought up something that I'm kind of curious about. We're drawing a distinction between Facebook and Spotify because Spotify has paid Joe Rogan and Facebook generally doesn't pay content creators. And I think it's obviously a very valid distinction. But you asked earlier about options. Let's just say that Spotify ends its deal with Joe Rogan and that show can now be widely distributed. And now his show is on YouTube and Apple and Spotify and Facebook and anywhere else you can listen to a podcast. I'm not entirely sure what that solves beyond having the direct relationship between Rogan and Spotify. So it seems to me sort of why Rumble is tossing its hat in the ring here. One of the options is that Rogan continues to do what he's doing, and another option is that pretty much all the major platforms decide that they don't want to be in business with him. David, your reaction?
Well, I think one possibility would be they could review his podcast before they air. If 130 episodes had to be removed, he's obviously said a lot of things that are offensive to a lot of people. But there's no reason why they couldn't take the interim step of at least saying publicly, we are going to pay more attention to what's said on this show before it airs. I don't know why Spotify wouldn't do something as minimal as that.
All right, fair enough. Thanks for the debate. David Kirkpatrick, Lucas Shaw, thank you both. We'll keep watching this one. Coming up, the bet on the metaverse. We're going to speak with Domain Money CEO Adam Bell about their metaverse strategy and what kind of innovations we should expect in tech. This is Bloomberg. With VC funds pouring serious capital into so-called Web3 companies and tech giants working on advances in AR and VR hardware, the metaverse has become one of the hottest tech investment themes. But is this really the next tech trend or a future .com bust? Joining us now, Domain Money CEO Adam Bell for a daily crypto report, along with Bloomberg's Shonali Bosick. Shonali, take it away.
Thank you, Emily, and thank you, Adam, for joining us. You think about Meta and their pivot to the metaverse and how it missed Wall Street's expectations. Now, as you create a strategy around investing in the metaverse, I'm wondering how long does it take to start seeing results from that?
Well, if you look at what has happened with NFTs in the last year or two, 23 billion in transactions last year, up from virtually nothing just a few years ago. What's clear is that this is a profound and large market, and investors are looking for access to that market.
Well, it's interesting. When you think about the metaverse, I'm wondering how the NFT strategy really fits into that. How do you bake in crypto investments into a liquid portfolio here?
Yeah, we've put together a strategy at Domain Money that focuses on the infrastructure layer of the metaverse, which obviously incorporates NFTs, the transactions required to buy an NFT, the storage requirements to have those assets be housed, the rendering technologies to process three-dimensional objects in real time in a virtual world. All of those things are infrastructure bets that are part of our metaverse strategy.
Adam, there are folks out there who think the metaverse is just a pipe dream. How big do you think the total addressable market really is here? And when does that market actually start being addressed?
Yeah, well, the notion of the metaverse being something that emerges in one day and is an all-encompassing virtual world is really missing the point. The metaverse is a collection of digital locations or experiences that are occurring today in the world. Roblox, Snap, augmented reality, virtual reality, all of these things make up a collection of experiences that define the metaverse.
You mentioned companies that are more focusing on the software experience, and I wonder about the hardware. Who do you see cracking that hardware part of the market, and is that necessary to get that innovation to the masses? Is it Meta? Is it Apple? Is it Microsoft?
Sure. Well, certainly NVIDIA, Qualcomm, and just the massive storage requirements that are needed to house this many digital assets is a profound market in and of itself. And so we've looked at a number of those underlying technologies as we thought about crafting our metaverse strategy.
You know, when you think about the metaverse here, Adam, I'm wondering how this plays into the larger picture of what you're trying to build at Domain Money. You left Goldman Sachs, you were building a traditional investing and saving platform. How many people now have signed up with you in the recent weeks since starting Domain Money, launching the platform, and allowing people to both invest in cryptocurrency now and stocks?
Yeah, thank you for that question. So we've been really pleased with our reception in the market. We have thousands of customers. We've only been live for a week or two, and it's been quite incredible to see the response, particularly to our strategies. Investors are looking for a responsible, diversified way to invest in these new asset classes. And rather than having to make a bet on one individual protocol or cryptocurrency, investors can avail themselves to our strategies, which are curated by our investment team and represent a basket of assets that give investors exposure to this asset class.
And you're also getting some exposure to the crypto space. Can you tell us specifically where and if the recent tumult in the crypto markets is giving you any pause?
Well, the short-term volatility in this market is to be expected. What I think is more important to focus on is what is happening in the blockchain ecosystem. You know, what we've seen is DeFi marketplaces emerge over the last few years, less than 5 billion in transaction volume, up to nearly 200 billion. That's not speculation. That's investors, that's dollars being placed into a market to appreciate yield, to lend or to borrow. Cryptocurrencies, the blockchain ecosystem is opening up access to financial markets in a way that heretofore has never been available. And that's a profound shift in the way financial services work. We think blockchain technologies represent the operating system of finance. Mm-hmm. And so we're very excited about the future of these technologies despite the current market tumult.
You know, I think about DeFi and how many companies in the last couple of months have pitched me their own DeFi strategy from traditional finance. And having now kind of worked with both, do you think tried and true financial players are going to be able to become DeFi?
Well, there's no question that the large incumbent financial institutions are going to embrace blockchain technologies. In fact, they already have. I'm reminded of the comment that Jamie made at JP Morgan Chase about crypto in general. And now, of course, JP Morgan has their own coin. And so it's very clear that the large investment firms are moving into cryptocurrencies, moving into blockchain technologies. And the thing that I am quite interested in is if you look at the developer community, the engineering efforts that are going on behind the scenes, it's really hard to find a technology startup that's focused on financial services that isn't embracing blockchain technologies.
Right.
And that ought to tell you something.
And Adam, what does this mean for the war on talent here? You hear the banks and you hear also crypto firms just really needing engineering talent here. Is it getting really competitive? And I say that as somebody who just hired from Bridgewater, 30 people from Goldman Sachs. Where are you getting your talent?
Well, we've been very delighted by the quality of the resumes that are coming over the transom. We have a number of job openings at Domain Money, and so encourage people to check those out on our website. But yes, your point is well taken. It used to be that the large banks had to just contend with the Googles and the Facebooks of the world for the talent war. Now there's a whole new wave of DeFi entrants that are stealing quality candidates away from even the Googles and the Apples of the world. And so there is absolutely a talent war happening. But it's interesting. I was asked to give a talk at Harvard a few weeks ago and was amazed at the number of people who plan to go into crypto after they graduate. You know, the wave is absolutely a large one. And I think it's early days for this market space. We have really yet to see the best implementations of blockchain technologies. They are yet to come.
All right. Adam Dell, CEO of Domain Money. Thank you very much, along with Bloomberg's Sonali Basak. Coming up, Netflix is realizing just how profitable Korean content can be. And They're hoping their new shows in 2022 can match the success of Squid Game. We'll discuss how next. This is Bloomberg. Following the smash success of Squid Game, Netflix doubling down on Korean content in 2022 with 25 films and series set to be released this year. For more, I want to bring in Webtoon's U.S. CEO, Ken Kim. Ken, talk to us about Webtoon's strategy and the success with this recent phenomenon based on Netflix really making this bet.
Thank you for having me today. I'm really excited to talk about the Webtoon and Webtoon stories. So Webtoon is the world's largest digital comic platform, and we have more than 14 million monthly users in US and 72 million global users monthly. So our storytelling technology revolutionized how to create the creative stories and can be consumed through mobile phone immediately. So for now, we have more than 750,000 of creators who is creating more than 1.3 billion titles. So you've already seen a lot of our contents already through Netflix or bookshelves. So such as, All of Us Are Dead is another great stories that we just adapted last 2 weeks back of the Fridays.
You've got a huge following on social media, and I'm curious, are other platforms taking note, or is it just Netflix at this point that's giving you inbound?
You can find Webtoon stories everywhere already. So, one of our titles, Lore Olympus, which is already New York Times best-selling graphic novel, and a lot of our content is under development to be developed as videos and movies and dramas, and such as a lot of other formats are already being prepared through our platform.
Now, you've been inking partnerships with Marvel, global esports games, graphic novels are all the rage now. I know my son loves those. How do you think about the content pipeline and what format is the best for storytelling these days?
Storytelling is everything and everywhere. So Webtoon, we aim for mobile native storytelling format, such as, now everyone use their smartphone or their laptops or any other mobile platform to consume the content. At the same time, we revolutionized how to make the mobile native format of storytelling. That resulted as more of a huge amount of creators. They are joining to this platform, and then they are creating a lot of stories through our platform.
Talk to us about the creators and how much they get paid. How do you see Webtoon standing out on this note, given that's where the storytelling originates, right?
Of course. There are a lot of range of success of creators within our platform. The biggest earning of the creators of last year was over $12 million. And on average in Korean Webtoon creators, they make on average $250,000. This is not just the only for the big creators. So Webtoon, we built on $1 billion IP business, which is supporting all range of creators to make their monies for their work and manage their lives.
Now, obviously we've been talking a lot about Korean originals, especially with the success of Squid Game. Do you see this happening for other languages? I'm thinking about Borgen, a Danish show that has been a smash hit in the US, Le Bureau, Lupin, obviously both in French.
Of course. Squid Game and All of Us Are Dead is great stories too. But this is not only from Korean content. Webtoon is already global content platform. We have over 750,000 creators globally. And then we have a lot of content, from them. So this is not just,
right.
Korean content.
Well, looking forward to lots more. Ken Kim, CEO of Webtoon US. Thanks so much for joining us. And that does it for this edition of Bloomberg Technology. Great show tomorrow. We're going to continue our coverage of Peloton. Second quarter results out after the bell. All the headlines right here. I'm Emily Chang. This is Bloomberg.